Hey, what's up guys? Just wanted to drop a quick video as I'm doing things that normally people don't like doing, which is car buying. You buy a car and it takes forever. I know people can attest to that. You come in, you're like, man, this thing's gonna take 2 hours or something, and yet it's gonna take probably more like 5 hours to your whole day. You're gonna end up eating lunch, dinner. You might set up a cot in the back of the dealership and just sleep back there while this whole thing's getting done. It's a long process. But what I think is cool is just, it gives you time. It's giving me time to think about things and think about why, my favorite topic is being a realtor. And you think, okay, every realtor is here to sell. You're just trying to get somebody into a house, buy or sell it. No holds barred, at whatever cost. And that's really not my approach. I really like to think that it's really just about the person, and you got to look at all the facts. So one interesting thing that today, interest rates fluctuate daily. So some days it can go up a couple points, maybe come down. Today was pretty good. Right now it's like March 5th, but it could be something different tomorrow. One thing that is coming out in the next day or so, you see here all the background. This is not a best production video here, but it's just off the top. So one thing that's happening is the ADP Jobs Report is dropping soon. And typically, the Bureau of Labor Statistics, they drop these reports to be able to analyze what's going on with the market, what's going on with unemployment. Are we losing jobs? People, I think the buzzword is, are we in a recession? Which I feel like, the government knows that we are either in it or we're already headed to that. All the indicators are lagging indicators. So, they don't really know until a couple months down the line whether that's the case or not. But there's already been indication based on 2 successive, quarters, that it's been indicated that the GDP or the economy itself has shrunk. So that typically signals, hey, that's the official signal of, hey, we're in a recession. It's just that they're saying, shh, keep it quiet. Don't tell anybody that. So what does that mean for you in buying a home? So typically it means people want to probably stay put. They don't want to go anywhere. They want to stay in their homes. People are being able to refinance into lower cost, lower interest loans. So it means you're going to stay in your home, and typically your payment is good, something and you have your job. So this job report is going to be able to analyze, okay, have we been losing jobs within this last quarter? What's been going on the last couple of months? And what that may do, typically, and it really doesn't take much to spook the market. Something's going to happen and it'll spook the market. And it may cause interest rates to kind of go up, tick up a little bit. But what you can do is you can ask your lender to potentially lock in the rate. Say if you're starting your home shopping and you've gotten pre-approved, your lender can lock in the interest rate, like say for today, even tomorrow. That way, if there is an increase, you're good, you're locked in. However, it's probably going to be better for people that are immediately, kind of like within the next month or 2, looking to buy, rather than a couple months down the line. So because interest rates change daily. But overall, they do expect the interest rates to improve throughout the year going into end of 2023, 2024. So that's good news for buyers. I just had my phone kind of died right there. So I got a quick charge and I'm finishing up now. So I'm like, yeah, that's gonna look weird on an edit right there. But so my phone died because I was probably talking too much. I didn't want to make this a long video. Just wanted to give a quick update on what's going on and what you guys should expect. So that's really the long and thick of it. Just if you have a loan that you're currently looking to get, ask your lender if they can lock that rate in. And of course, if you're a couple months out still, then you may just want to wait to see how the market reacts to these reports coming out within the next week or so. Market reacts how it reacts. No one can predict it. It's not an exact science. So we don't know if it's going to spook the market and then inversely cause interest rates to increase, because the Fed was gonna, once they have confirmation of, hey, we're in a recession, they're gonna have to do things to aggressively try to correct that. So that means they may potentially raise their rate, which in turn raises the rates for mortgages. So that's it, man. That's it, everybody. Stay safe. Happy trails on your buying journey.